Joining me now is economist John Lonski. John, Lutnick says the tariffs go into effect on August the 1st, no matter what. Okay, they're coming. August the 1st. Well, what does that do to the economy?
Okay, the first thing that I'm worried about, what about retaliation? What is it if we go in and raise the tariffs to 35%? Our major trading partners in Europe, we have $1 trillion of total trade between Europe and the United States. What if the Europeans increase tariffs on U.S. exports? That's not going to be good. That's not going to be good for U.S. exporters.
I believe, let me jump in. I believe that one of the German ministers said this morning that they're not thinking about retaliation after August the 1st. He wants to get on the good side of Trump. So,
okay, well, that's a negotiating tactic. But what does the French trade minister think? See, that's what I would ask. I wonder about that. If all of the member countries of the EU are going to go along with holding back on retaliation.
At the end of the day, a lot of people are telling me that it's going to be an across-the-board 10% tariff, pretty much as it is now. Maybe some places a bit more, maybe some places a bit less. Could the economy and the inflation outlook live with a 10% across-the-board tariff?
Well, Stuart, that's a great forecast on tariffs. I think it's going to prove true. And I think the economy can very well live with a 10% across-the-board increase on tariffs.
And it'll be a revenue raiser as well.
It will be, but let's not kid ourselves. You know, we're talking about this big jump in tariff revenue thus far in the fiscal year. But that right now, even with that jump, tariff tax revenue amounts to only 3% of total U.S. government tax revenues. It's not going to be a cure-all for the U.S. budget deficit. And I think that U.S. budget deficit has been weighing heavily on long-term interest rates.
I've got a headline for you. It's in the Wall Street Journal. It says, firing Powell would shatter the economy's inflation defenses. You agree with that? You get rid of Powell, do we end all our defenses against inflation?
No, that's not necessarily the case. My fear would be the following. Suppose we go ahead, fire Powell, he puts somebody in as Fed chairman, they cut rates deeply. Early on, you may not have much of a negative reaction as far as inflation goes, but over time, that decision could prove to be very costly. And of course, one of the great risks is if it looks as though the White House is dictating monetary policy, that's got to hurt inflation expectations. And we might again find that despite another round of rate cuts, those long-term Treasury bond yields move higher, and that would be very bad news for the now struggling housing market.
It would indeed. John Lonski, thanks for joining us.
Thank you.